One of the natural things that happens with tax insurance, because an insurer is taking on risk and they have minimum premium amounts and they have underwriting fees, the sort of cardinal rule on tax insurance is that your all-in cost it could be between about 2 to 5% of your limit of liability that you're looking to cover. And and facts and what you're putting on the table and your particular transaction obviously helps you move within that relatively big range. But when you're below, say, like $5 million is when you really start seeing that cost in terms of per dollar insured go up above that 5% all-in number, right? So the reason why I brought that up is that if you are a smaller scale developer, right, and you're putting a bunch of, say, 2 megawatt projects together, you're probably going to want to find an insurance solution that allows you to get a portfolio insurance, right? Wrap a bunch of those projects together under one policy so you get the economies of scale instead of trying to insure each individual 2 megawatt project. Now if you're a commercial developer and you're developing on a gigawatt scale, that's less of an important dynamic. But there's any number of different ways that it can be done. And Aon has done this, for residential solar companies for many, many years in terms of, figuring out the creative solutions to have a policy period that stays open. You can contribute the individual very small, 6 to 10 kilowatt projects into a insurance program over time, paying on a pay-go basis, but you're eventually getting, the benefit of having these, $100 million, $200 million insurance policies, but you're paying for them all along as opposed to having to pay for that upfront.